What is up, everybody? Steve here. I hope you are doing well. Home builders are in trouble despite what a lot of people are talking about. I called this probably 6 to 8 months ago, saying that home builders will start lowering prices on inventory as buyer demand decreases. I said that they're going to start with incentives, which we're seeing in a lot of areas, and then we're actually going to start seeing actual declines in offering prices, and we're seeing that in Southwest Florida here as well. And sure enough, even CNBC is coming out with their article, with their headline talking about sentiment turns negative. So let's dive into this article and we'll talk a little bit more about what I think people should be doing right now if you guys are in the market or looking to invest in the future, as to where to get some good deals. So let's dive in. Home builders say U.S. is in a housing recession as sentiment turns negative. Home builder sentiment in the market for single-family homes fell into negative territory in August as builders and buyers struggle with higher costs. Now, there's a lot of people, and I still hear it time and time again, you got people saying the giant hedge funds and all these institutional buyers are out there and they're just going to gobble all this stuff up. And obviously, if that were the truth, we would not see home builders be in distress right now, because these large institutional investors should be going in and buying these, right? So now we got National Association of Home Builders. The index dropped 6 points to 49 this month. It's 8th straight monthly decline. Anything above 50 is considered positive, and it hasn't been this negative except for a short period of time when COVID first started. It hasn't been this negative since June of 2014. Goes on to say tighter monetary policy from the Federal Reserve and persistent elevated construction costs have brought on a housing recession. The National Association of Home Builders chief economist says, now obviously the Federal Reserve has to keep increasing the Fed rate because they're trying to combat inflation. That's a big issue with a lot of people. A lot of things are very expensive right now. And unfortunately, home affordability is not cheap. And, the other day I was talking to somebody who's leasing a property, and I know for a fact what they're paying for basically a one bedroom is more than half of what their take-home pay is. Now, anybody that's paying more than 50% of their net that's in their pocket is unfortunately going to be in big trouble. They're paycheck to paycheck. They're just getting by. And that's what we're seeing across the board. And I hate to make predictions, but just looking back in history and even gone through the last real estate recession, I've seen a lot of people basically let go of rentals and even homes in terms of their mortgages, let them go, and then they moved in with family members and friends just to basically team up on that expenditure because the cost of housing is so high. I believe we're going to see more and more of that, basically consolidation of homes over the next 2 to 4 years, because everything has just been outrageously over expensive. So I think that we're just seeing the beginning of this, guys. Goes on to say, of the index's 3 components, current sale conditions dropped 7 points to 57. Sales expectations in the next 6 months fell 2 points to 47, and buyer traffic fell 5 points to 32. Despite higher costs for land, labor, and materials, 1 in 5 builders in August reported lowering prices in the past month in an effort to increase sales or limit cancellations. The average drop reported 5%. Again, I've been saying that we would see more and more price reductions from home builders, and I think 5% is just the start of things. Total volume of single-family starts will post a decline in 2022, the first such decrease in 2011. Now, if you guys are in the market to buy new construction and you have the ability to wait it out, you probably want to wait it out in most markets, because I think you're going to have more and more incentives. You're going to have incentives toward closing costs. You're going to have incentives to buy down your mortgage rate. You're going to have incentives in terms of lowering prices as well. So the market is shifting from a seller's market into a buyer's market. These builders are nervous. They have to get this inventory off their books. Many of these builders don't want to turn these things into rentals. And a lot of them that are half built, they want to get these things pre-sold. They're starting to see material costs kind of level out, so they know they have a better idea than a year ago what the cost is to complete a project. So I believe you're going to start seeing half-built properties. You're going to get a better discount. You're going to be able to choose all the finishes and everything else. And, you know, if you're an investor, there might be prime time where you're going to be able to go in, especially smaller builders that are in trouble. Just keep your eye out for some of these half-built homes where they have roof trusses sitting outside, getting moldy and everything else. Those could be opportunity for you guys if you guys have money to figure out how you guys can work your way into buying some of these properties, because I think a lot of builders are going to be stuck with properties where buyers just bail out because of the cost of financing got so steep, and it's just pricing people out. So if you can wait to buy, I think that's going to be your best bet, because I think we're just at the beginning stages of a declining housing market. Anyway, I appreciate you guys being with me today, and I'll see you guys on the next video. See you.